Hey everybody, what's going on? It is James here with Crypto Common Sense, and I wanted to sit down today and shoot a video. I'm going to talk about a few charts, but I also want to kind of address a bit of something big that's changed recently. So on May 8th of this year, just like about 10 days ago, Bybit actually started doing KYC on their exchange. So people like me, I'm located in the United States, and I can't trade there anymore because I can't verify my account. And with that changed everything for me, because I can't day trade cryptocurrency, or at least I don't want to day trade cryptocurrency on a US based site. That's what I did before I started using foreign sites. I didn't switch to foreign sites until 2019. I had been trading on Kraken. At the time I was day trading on Kraken because their fees were better than some of the alternatives, but they were still terrible. I was paying, at the time I was only trading like $1 to $2 million a month in volume, and I was paying like $4,000 a month in trade fees. And then I realized that I could trade on BitMEX, and so I went to BitMEX because their fees were like literally about a tenth of what I was paying, so it automatically added thousands of dollars a month to my bottom line. Then BitMEX, of course, booted US traders, and that's how I ended up on Bybit a few years ago. And it's been a good run. It was a good run, and their fees were competitive with other sites in the crypto world. But I'm going to show you a few things today that might blow your mind. And if you're somebody that is in the US and you want to day trade, the only thing I can tell you is you should be looking hard at trading stocks instead of cryptocurrency for day trading. We'll talk about swing trading and stuff in here in a few minutes. But I'll give you an example of this. So this is a screenshot of my Thinkorswim from today. This is just today's trades. So I bought 11,181 shares of QQQ, which is the ETF for the NASDAQ, and I sold 11,181 shares. That was over the course of several trades, dozens of trades, okay? So it's about $7 million or so worth of volume. And then I did some options trades and some trades on another stock as well. But let's just focus on this one. So about $7 million, okay, give or take a few dollars in volume. Now, the fees on that, the regulatory fees, it's like 0.27 cents per share. It ends up being like 27 cents for every 100 shares sold, okay? They don't hit me on both sides. They just hit me for the round trip. So if you got 11,181 shares divided by 100, we'll just round that up. We'll call it 112 times 27 cents. What is that? Like, I don't know, 30 bucks? So let's say 112 times 27. Okay, so call it 30 bucks, right? $30.24. That was my fees for trading that. Okay. Not bad, right? $30 in fees for $7 million in volume. Now, go look at crypto. On Bybit, I was paying a taker fee of 0.06%. Okay, so that's 0.0006. Now, say I traded $7 million on Bybit today, would have had a $4,200 trade fee versus 30. Let's say that I was trading on a site like Coinbase, which charges as much as 1% based on volume. 7.5, sorry, what was it, 7 million I said? 7 million times 1% would be $70,000 in trade fees. And even with volume discounts, which Coinbase does give volume discounts, oftentimes you're still paying over 1/4% or 0.5%. So say 1/4%, 0.0025 times 7 million. $17,500 in fees. Do you think I made $17,000 today? Because I didn't, right? Had I been trading cryptocurrency, I would have taken a massive loss just because of the fees. It's insane, right? Say you're trading on Binance, which Binance has a 0.1% fee last I checked, Binance.us. $7 million times 0.1% fee. $7,000 in fees. Again, I did not make $7,000 today. So if I had to pay $7,000 in fees, I would have just been up a creek without a paddle. I can do the high volume in trading on stocks because there's essentially almost no fee. Okay. So if you're somebody that, again, if you're in the United States, if you're still, if you're overseas and you have access to Bybit, you can still day trade there. You just can't do what I'm doing here. I was scalping 15-second charts. But, if you're trying to day trade and you're in the US, you really need to look at getting into the stock market. And I understand that there's a barrier to entry. A lot of people, they don't have the $25,000 to get started, which is a requirement for what they call a pattern day trader in the US. But what you do is you just, you can take 3 trades a week without having $25,000, and you just slowly work your way up. It may take you, months or a few years even to get there, but the longer you wait to start, the longer it's going to take to get there. So I wanted to do this video because somebody just asked me on Facebook, hey, where are you trading at now? And the answer is I'm not. I'm no longer day trading cryptocurrency, and I probably won't ever trade it again on a day trade. Now, swing trades, again, that's different. But as far as day trades, I'm just not going to go back to where I was paying thousands of dollars a month in fees. And with the kind of trading I'm doing on stocks, it's not even viable, period. You can't do it in cryptocurrency because a lot of these moves that I'm trading on the QQQ, a lot of times I'm scalping a fraction of a percent, and the fee would actually be higher than the profits I'm making when I'm right. So, yeah. Not day trading cryptocurrency anymore. As far as, for those of you that don't want to trade the stocks, but you are in the United States and you can't day trade crypto, or it's not viable, whatever the case may be, you've got to focus on larger time frames. That's what you have to do. Okay. And just kind of as an example of this, you have to remember that trading should not be complicated. If it's complicated, it means you're probably doing something wrong, right? You don't need 8 million indicators. You don't need, all the stuff that people love to go on social media and talk about concepts for the simple purpose of sounding smart. But so much of that stuff is pointless and useless. Listen, I see people talking about concepts sometimes. I don't know what they're talking about. I have to go Google it, and I'm like, okay, how is that even helpful, right? I don't know half of what people are saying when they talk on social media, and yet I'm literally over here trading from a spare bedroom, tens of millions of dollars a month worth of volume. And, today was a big day. I'm, like I said, over $7 million in a single day. You don't need that. And the funny thing is you don't trade millions of dollars in volume if you're losing. Because if you're losing, it doesn't take very long to go broke trading that kind of volume, right? So I'm telling you, you guys don't need all that stuff. You don't need to be fancy. Just keep it simple. And I've got some indicators, and I've got some more that I'm going to be releasing this month. So it's not that I have a problem with indicators, but indicators by themselves can be dangerous, because if you don't know what's going on, and an indicator says buy or an indicator says sell, and you don't understand whether that's a legitimate signal, and B, whether or not where you should put the profit target, where you should put the stop. You don't know sometimes, if you don't know anything about trading and you just blindly follow indicators, it might say buy, but you don't know. Is that supposed to be a scalp? Is that supposed to be in and out 2 to 1? It's supposed to be a trade that you ride? What is it? And if you don't know, you don't know. Okay, so let me kind of show you this real quick. This is a Litecoin chart. I hadn't looked at Litecoin in a very long time. Somebody in my Discord brought it up a few days ago, so I took a look at it. And this was just an old chart that had been mocked up for quite a while. If you guys remember, many, many times I've talked about the Hodler soul crushing zone. Basically, when an asset retraces to 61.8, it's golden pocket in reverse. I call it the Hodler soul crushing zone, right? So this was a chart that I had posted apparently at some point in 2021. And look what happened. It touched it and just collapsed. How simple is that? It's very simple, right? And if you zoom into a 4-hour chart, that's what you do. If you're swing trading, you zoom into a 1-hour or 4-hour chart, even a daily chart, and you find a reason for your trade. And then you take your trade, you put your stop, and you set your profit target and go on about your way. And same thing down here. Let's go over to a weekly chart. So you have Litecoin. It collapsed. It's down. I don't know how far it fell. Over 90% from its 2021 high. So automatically, I'm interested in anything that's down 90%. Doesn't mean I'll blindly buy it, but it's automatically got my attention. And the first question I'm going to ask myself is, do I think this asset will be worth more in the future? That's number one. In other words, do I think the asset is dying? Or do I think it's got life left in it? An asset like Litecoin, obviously, I think it still has life in it, right? I think that there's life in Litecoin, especially because there's a halving coming up in 3 months. Now, full disclosure, I have an investment in Litecoin. I've had an investment in Litecoin, been holding it for several years, since 2017. I bought Litecoin at like 25 bucks, 27 bucks, something like that in 2017. And even though I traded it in and out many times over the next few years, I kept a stack to the side that was a long-term, I said a 10-year investment. And I still got that. So when I'm talking about Litecoin, full disclosure, I do hold some. Okay, that's not why I'm doing the video. I'm just wanting to share this with you because it's simple stuff. So you got an asset that's down 90%. And then you have an asset that ranged sideways. Right? What is this called? It's called consolidation. So you might not be too gung-ho on buying it during the consolidation. It might be a scary place. Totally understand that. You might not want to buy the breakout. I understand that. But when it came back down right here and tested that breakout, that's a simple reason to go long on an asset, right? That's what you're looking for. You're looking for the breakout. You're looking for the resting period. And then you're looking for it to move up. And that's exactly what it did. So that's what you're looking for when you're trying to find swing trades. Okay? You're looking for that type of action. Same thing here. It comes down, nails that thing. This is a weekly candle. Nails that thing and leaves that big tail behind. That screams demand, right? It's retesting this. That screams demand. Do you know what this chart looks like? Look at this. Pay real close attention to this. What does that look like? There's another chart that it looks almost identical to. So here's Bitcoin, right? I don't want to go that far back. You might remember the bottom of 2018, right? If you were trading cryptocurrency back then. So it had the big drop. It fell 83%, right? Litecoin fell 90%. Consolidated down here, broke out. Look at this. See it? There's your consolidation right there on Bitcoin. Broke out. Here's the retest. It retested the high back here. See? And then, boom, moonshot, right? All the way up to almost $14,000. And then in 2020, it actually came back down and retested that same zone, right? The same zone through here. Look at that. Bam, retest. So you have a very similar action, this being kind of like this point here and this being kind of like this point here, right? Very, very similar. I'm not telling you to get long on Litecoin. This is not about getting long or short on Litecoin. It's about showing you, like, if you see this pattern, if you see this really simple consolidation pattern after a big move, those are really good areas to start hunting for trades, right? Depending on what the chart looks like, you have to decide whether you want to go long or short. But that's what you're looking for in swing trades, stuff like this. What gets people in trouble on swing trades is they literally just start guessing where the market's going to go. Well, I think it's going to go up. I think it's going to go down. Like, you might be right part of the time. I mean, you're surely going to be right part of the time. Maybe 30, 40, 50, even 50% if you're lucky, maybe. But it's so much simpler if you just wait for very, very specific patterns to show up and trade multiple assets, right? So instead of falling in love with Litecoin and trying to trade just Litecoin, for example, you would look at a 4-hour chart or a daily chart, weekly chart, etc., of maybe 200 different cryptocurrencies or 100 different cryptos. So you're always looking for those. And it's one thing about crypto that it can be simpler than trading, like a day trade type of deal. Because in day trading, a lot of times you're looking at one chart and you're watching smaller time frames. And so it's kind of like watching paint dry a little bit because you're not really actively doing anything. Like if you're trading a 5-minute QQQ chart, you might wait for hours before you take a trade. Now, again, I'm a little different. I was trading 15-second charts today. I like the action. I'm kind of wired that way. But because I'm trading 15-second charts, I'm seeing patterns like this happen all the time. Like here's a 15-second chart today. I'll kind of show you how this works, right? So big move down. It's not 90% because it's a 15-second chart, right? Probably about 0.5%. 0.48%, right? And it actually started consolidating. Wasn't quite as clean as that Litecoin chart, but turn volume off just so it's a little easier to see. So I'm consolidating down here. I come up. I basically put in this high right here Also put in a high right here. Okay. So you're kind of coming down, doing this lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high. There's your first sign that there might be a reversal. Pulls back, breaks out, retests, long, right? But you're doing it on a 15-second chart. So you see a lot of stuff, a lot of trades throughout the day. Like here's another one over here, kind of the same deal, right? This one didn't have a beautiful retest. But the difference in that and crypto, again, if you're doing swing trades, you just jump over to, like, get your list. Like, here's a list I have put together, right? And you just go down there, like maybe every night, right? Maybe every evening you go down and look at the daily charts and, hey, are any of these hitting, zones? Are any of these hitting areas of interest? Are they hitting supply where I might want to look for a short? Are they hitting demand where I might want to look for a long? Like, here's a perfect example, right? This Crow coin. Look at this. Consolidation, right? Double bottom, whatever you want to call it, range. Look at this. Boom. Breaks out, doesn't get to retest. Bummer. Except, yes, it does. See it? Right there's your swing trade. You're testing demand. You take out your long. You get your little profit. You go on about your day, right? Or your week or whatever, because swing trades can last several days. But that's the difference. Like, and a lot of people, they talk about, well, I don't have time to trade because I have a job. It's a complete excuse, right? It's a complete excuse. There's probably like less than 1% of people who literally don't have time to trade. And when I say 1% of people, I'm talking about people who are looking at charts and interested in trading. Obviously, there's a lot of people in the world that are struggling that don't even have access to a computer or clean water. But I'm talking about 1% of people who say they want to trade. 99% of people do have time, right? You just sit down for 30 minutes or an hour a day. And same thing here, like here's Doge, right? Here's a simple idea. So you got a huge breakout on Doge. This is back in November 2022. You come down. Maybe you can get a trade in here. It's kind of sketchy. But here you leave this demand tail behind. Yeah. Look left. What was that testing, right? Consolidation back here. See it? Main difference on this one, you kind of consolidated a long time, but your tight range was right through here. Pull it over. Do you see how it was respected here, 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 and even here? You see that? Like, it's really simple stuff. And those of you who have followed me for a long time, you'll have heard me say before, people ask me what I do for a living. And I tell them I draw lines on a chart, right? Sometimes I even go as far as to say I draw lines on an 8-year-old control. Because that's really all you need. I mean, just really, it's all you need. The reason that I developed indicators is because sometimes when you're trading, especially for newer people, it's hard to see the forest through the trees. And so if you get an alert, for example, so let's say that, for example, you get an alert, okay, like this, you get a sell signal. Maybe you would have seen this, maybe not. Look left, right? See that? Now you see a sell signal, and now maybe your brain says, oh, is there a trade there? And then you go verify, and if you want to take it, you take it. And like this trade here, boom, right? Wonderful trade. And then over the course of the day, it's not 100%, right? And this isn't released yet. It will be released soon. It's not 100%. It won one, lost these two, won this one, would have won this one, lost that one, lost that one. It looks like it would have won, but it actually would have got clipped. Won that one, so on and so forth. So these aren't the only trades I took today, by the way. I mean, I wouldn't have traded $7 million volume on just 8 trades. But if you look at this, there were 8 labels on the chart. 4 of them are winners. So if you lose 4, say for easy math, you lose $1 when you're wrong. So you lost $4 and you make $3 when you're right. 4 times 3 is 12. 12 minus 4 is $8, right? Just following that. And that's the reason that I have indicators. It's because sometimes you just don't see it. You're looking at it, but you don't see it. Or maybe you're slightly distracted. And so you miss it until, it's too late to get in. And when you have a label pop up on a chart, it's like kind of like a flashing sign, like, oh, I need to look at that closer. But trading is really, really simple, guys and girls, right? It's just dead simple stuff. Where trading becomes more difficult is when you're in a bull market and you're sitting at all-time highs. And if you ask why, well, think about it for a second. When you're up in an area like this, which that's not an all-time high, EOS was actually $28 or something years ago. But say this was an all-time high. There's no resistance. If you look left, there's nothing. All right, trading views being quirky. There's nothing left that you can look at and say, oh, I have a resistance level there. Yeah, and that's the reason that trying to pick tops is very, very, very difficult to do, and for most people, a terrible idea. All right, so it's really tough to tell where something's going to top at because you don't have any way to look left. But here's EOS. Again, we hadn't looked at EOS yet. Look at this. This is back in 2021. See how it consolidated all through here? Right? Right this area, consolidation, and then pop, and what happened? Comes right back down. And then boom, right? If you're buying down around this area, you've been buying around 450 or so, and it popped to almost 15 bucks. When it got over here, there was still demand left over, and so it bounced again, right? Didn't have a new bull run, but it bounced, big bounce from 450 up to around 680. Hit it here, still demand left over. It bounced again, and finally, demand failed, came back down, and then what did it do? Look at this. Look at this. I didn't look at this beforehand. This is completely off the cuff. This exact same zone from early 2021 became your consolidation zone in the summer of 2021. And then what happened? It popped. Again, it popped, right? And then finally, it broke through. Tried, right? Bulls tried. They said, no. We don't want to lose it. Put a little baby push up, and no, game over, Bulls. And then what happens? It flips. It's no longer support. Now it's resistance. You see this? It's just lines, guys. It's lines. So yeah, wanted to give you that quick kind of, tutorial because again, I feel like so many people in this space, they're so busy patting themselves on the back, trying to sound super smart and super intelligent, that they just put out a lot of confusing information. You don't need it. You don't need all that confusing high-level stuff. I'm sure it has its place. I'm sure there are some people that trade with some fancy stuff and they make all kinds of money with it. But I draw lines and I'm doing perfectly fine, right? I'm over 6 years into this now, trading bigger and bigger positions every year, trading more and more volume every single year. And I don't expect to quit anytime soon. I suspect that I'll do this for the rest of my life, so long as I'm mentally aware of what's going on. It's not exactly like a tough job where you get wore out and your back hurts and you can't go to work. Like I get up in the morning, I sit down, I try to get at the desk before 8:15, and I usually trade from 8:15 to about 1 in the afternoon or noon, depending on the day. Also depends on how well I do. If I have a really good morning, I might be up huge in the first hour and a half. I usually stop. I'm like, okay, I don't want to gamble and give it all back, and it sounds funny, but I find that to be the case. When I get up really big, if I keep trading, I tend to give it back. And I think it's a mental thing where I get a little bit lazy with my risk management. I get a little bit too aggressive on some trades because it's like, oh, I'm up XYZ. I've got a cushion or a buffer. And I end up losing money a lot of times when I do that, or at least losing part of my profits. So if I start the day off really good, I'm done in an hour and a half. If it's a slower day, or if I'm kind of winning and losing and kind of running close to even or small profits or even small losses, then I'll trade the full day if I have to. But usually I try to be done by 1. It's a pretty simple lifestyle. But for those of you that do have full-time jobs and other careers that you're focused on, just make you a list like this of the assets that you're interested in, and then make it a daily activity. Go through and check the daily charts, 4-hour charts, weekly charts, and find those lines, and then trade the lines accordingly. All right. So hopefully y'all enjoyed this. I'm going to go ahead and wrap it up there. Please remember, I am just some guy sitting in a spare bedroom. Obviously, that means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you enjoyed the video, give it a thumbs up. Make sure you subscribe to the channel. And again, stay tuned. I'll be releasing some of these new indicators this month. I've also been reshooting every single video in my trade course. I usually update it each year, but this year I decided to completely do it from scratch because my trading is so different from what it was a few years ago. And so I am redoing the entire course. I'll also be opening the doors to that later this month. All right. Thanks again. I'll see you in the next video.